Today we're going to talk about cars, and maybe you're here because you're looking to buy your first car, or you're actually owning a car and you're looking to trade it away. I hope to be able to deliver something that you can learn, about saving money as well as what you really need to know about car ownership in Singapore. But I'm not going to talk about the stuff you may already know, which is Singapore has one of the most expensive cars in the world.
Too high? No, it's actually 90 grand, $90,000 with tax, $90,000 with taxes.
Simply because COE is a paper you need to buy that depreciates over time. And instead, I'll touch on 3 points, which starts with first, understanding how interest is actually calculated for a car loan. Second, I'll be running through exactly when you repay a car loan early, what is the financial impact to you? And third, I'll be sharing with you a little bit more about car dealership, which is when you buy and sell with a car dealer. And last but not least, I'll end off with electric vehicles, which will be a big topic in Singapore one day. So before we get there, I invite you to smash on like early because it's taken our team hours. You do know I have very important information for you in this tutorial. For myself, I'm actually driving a very simple Mazda 6. And it's been banged up on the side by quite a bit and I haven't found time to even get it fixed. But some of my neighbors actually change cars almost every year. So I actually don't know why are they doing so, because it's really very costly. I've also private clients who have asked me before, should they repay off their car loans now with bank interest so low? And maybe this loan, they should pay it off. And today in this quick tutorial, you really understand where do car loans actually suck away money from you. And without further ado, let me start with the first of the 3 points, which is first, be careful about car loan rates you see out there. Now check out what I can find on these portals over here. This is actually by SingSaver. And you realize that car loan rates are about 2.78% and you can quickly see them with a portal like that. But if you look around, there are actually alternative car loans out there in the market, like something like this, like Leong. Because car loans are small, there are a lot of financing companies and Leong is just a very simple one of them, which provides it at 2.48%. Now 2.48% seems low, correct? But do note also, this is actually a simple interest method. When you buy a house, you actually take on a mortgage loan. And that mortgage loan actually pays down principal. So what exactly is simple interest? Is there a difference between simple interest and effective interest? Now just to put in layman perspective, simple interest is based on the original amount. And if your original amount is 100,000, that interest is already pre-calculated and divided over the subsequent months. So let's run through a case study, which I'll leave links below, just in case you want to find out further for yourself. In this example, you're actually borrowing $84,000. And before you get there, let me explain to you how much you can borrow if you're a first-time car owner. Now, if you want to borrow for a car purchase, you should realize that the amount you can borrow is either 70% or 60% depending on the car's OMV. In simple terms, is the more costly the car, the more likely you have to borrow only at 60% rate. So cheaper cars possibly at 70%, just as a simplistic way of explaining things. And you realize that the maximum tenure you can borrow for a car is actually 7 years only. When I first bought my Toyota Vios back in my school days, I could actually borrow 100%, that is true. But right now it's been clamped down. You can only borrow 60 or 70% and with a tenure of 7 years. Previously, it was 10 years. So what can we see from this example over here is if you borrow at $84,000, they compare between simple interest and effective interest. You realize that on a simple interest point of view, you are paying almost twice the amount, $16,000 plus. That is a big explanation to why you should be very careful about what you see in terms of the interest rate out there. Because when you calculate based on effective interest, 16,000 and 8,000 is a world of difference. And if you're thinking which loans are good loans to take, which loans are bad, I think very clearly I've given you a picture. Car loans are actually very bad to take on. Because the number you see over there, 2.48%, that simple interest number, when you put it to effective interest, it's probably 4.5%, thereabouts. So CPF special account gives you only 4% even, so 4.5%, that's going to cost you quite a lot of money. A loan that you really need to avoid. So you may be thinking, now you have a car, you have an existing car loan, should you rush to pay it off? That leads to point number 2, which is be careful about repaying your car loan because that also costs you money. Now, I mentioned about some neighbors selling the cars after 1 year plus. If they are going to do that, it's going to cost them quite a lot of money. Of course, some of them can afford it, but I'd like to highlight to you the cost of repaying that loan because many people are unaware of it. So let me pull up an example by DBS, which has very good diagrams that you can quickly understand. I'll leave links below just in case you want to follow a bit further on that. So what you can see from this first diagram is, in this example, a 60,000 loan was taken. And when you start paying off over a couple of months, some installments have been paid already, correct? And there lies the outstanding installment amount. So if you compare, you'll be thinking, hey, If I were to pay off this outstanding installment amount, wouldn't that mean that I only need to pay off the remaining loan amount, and since I'm paying off early, the bank shouldn't charge me on that interest, correct? They're getting back the monies already. Not correct. Therefore, that leads to graph number 2. And what do you realize? 20% of the remaining interest will be charged. There is a mathematical formula to it, but no need to understand it. You just need to understand that you will still be charged 20% of that interest. And that's just not the end, because there is still a further 1% they'll be charging on your total loan amount. Now, if your loan amount in this example is 60,000, you'll still be charged $600, 1% of that 60,000. If your car loan amount is 100,000, you'll be charged 1,000 just to pay off that loan. So 1,000 plus remaining interest, 20% will be charged. Therefore, if you repay off your car loan early, it doesn't make sense. It still costs you some money. That's why for myself, when I take on a car, I actually go fully paid. I don't even take a car loan, because this loan, whether you repay it early because you're trading off a car or not, you're still going to get some financial impact. That's why it's so lucrative for someone that's financing a car. And that leads to point number 3. Point number 3 is actually car dealership space is a very unfavorable position for you to be in. Now, why do I say so? I do know that there are good car dealers and bad car dealers in the market, just as in any industry. But this space, you should know that when you're going to deal with a car, you have an information gap between yourself and the dealer. Firstly, you don't know what price is your car really worth, because some dealer will quote you 30,000, some will quote you 31,500. You really don't know the real value of it, and each dealer is just going to tell you your car is slightly damaged here, things are not so good, they are looking to mark it down by a bit. And this information gap really impacts your ability to negotiate well. Not only that, when you trade with a car dealer, they usually expect you to take up their car loan because it's so lucrative, and also a pricier insurance. And having said all that, I actually don't have a solution for you on that. I sold my Camry to a dealer, but I do know always that this space is somewhere that is very difficult for you to be coming out of the equation favorably. That's why instead I'll share with you my experience when I work with a car dealer. I actually went to Quotes, which is by SG Car Marts, and that portal actually brought in multiple offers. But they are not the only portal in the market. Right now, there's another portal called Caro. And if you've seen this financial article, you realize that Caro has right now gotten a 1 billion valuation from SoftBank. Wow, so much money to make for car dealership. So if you are someone playing in the car space as a consumer, you do know that you are on the unfavorable end of the equation. So if you have benefited from this tutorial, smash the like button again and invite you to press the subscribe, because in a long way I'll be coming up with topics to help you in your financial journey. And share this video with anyone who's looking to buy a car. Maybe they should know a thing or two before getting into that space. And since you stayed here, I have a further tip for you. Cars are moving electric by 2040. And not only that, DBS actually has favorable car loan rates for electric vehicles, as you can see in this image over here. I've actually done a previous video on electric vehicles, and Tesla is a very popular choice. Right now, they are seeing some delays in shipment, but moving forward, you'll see more and more brands in this electric vehicle space, and a full tutorial on that. So look out for this tutorial. I've actually showed with you the landscape of electric vehicles as well as what's coming up in Singapore. So if you're looking to buy a car, look for the tutorial, learn a bit more. With that, I'll sign off from here and see you there. Take care and goodbye.